Hello, fellow traders. We're going into the last trading week of the year, the week between Christmas and New Year's. And that means many traders are going to be away on vacation and market volume is going to be light. And when that happens, of course, strange things can occur. Sudden volatility that's unanticipated. Something like what happened on Wednesday over here on December 20th, where the market basically traded within the calculated trading zone, but then took a deep dive and then fell out of bed, and for no reason at all. There was nothing that precipitated this big drop on Wednesday. Now on Thursday, and again on Friday, prices did not trade in the range forecast by the Taylor calculator. Now, as you know, the Taylor calculator is particularly accurate as to the trading range. But as we can see on both Thursday, the 21st, and Friday, the 22nd, prices traded in a narrower range. And I get this information from the Taylor calculator, where I calculate the numbers each day. I get my resistance, my support, and the trading range. And the trading range for Friday was predicted to be 47 points, and the day before was predicted at 63 points, and both these numbers were skewed by the big drop on Wednesday. And so, like you, I want to know the most important piece of information that I can in order to trade successfully, and that is, where is the market going? Well, usually the Taylor calculator is a pretty good indication of where it's going, although on Thursday and Friday didn't give me that assurance. So let's take a look at the big picture, because I did get some indication from that. Now here is the one-day chart of the S&P. And here are the last few days, and you'll notice that on Friday, what did we see? We see a definite doji, okay? Always pay attention when you see a doji. Now, you know that from your studies of candlestick charting. Now, most people, when they start trading, they read about candlesticks and candlestick patterns. And sometimes it gets lost in the fog of trading of the importance of these patterns. But there's a pattern here. That's definitely worth interpreting. And that is these four candles. This one on Friday the 15th, Monday the 18th, Tuesday the 19th, and Wednesday the 20th. All right? These four candles here. And that made me think and go back to my trading books, my candlestick charting books. And this one, Candlestick Trading, this one's by Stephen Bigelow. I looked up this pattern and I came across this. I don't know if you could see it, but I'm going to put the pages up. This is called the three-line strike. Three-line strike. And the three-line strike is three candles up in continuation, followed by a drop in the fourth candle, where the drop is below the low of the first candle. And that's a continuation pattern, okay? So, knowing where the market is going to go, again, is the most important piece of information that we want to know. But there's something else here. There's the time of year. And there's the fact that the S&P, and I'm going to pan over, see where the S&P is right here? About 4772, okay? I'm going to pan over back to the beginning of 2022, right over here, January 2022. And the high there was 48.16, and right now we are at 47.72. So 28 and 16, 44. We're pretty close to beating out the all-time high. And so the market came up smartly from the beginning of November to now, and now we have this big drop. Let me go back to this. We have this big drop. But this is a continuation pattern, and let me read the candlestick pattern. Three-line strike. Three-line strike, also known as the fooling three soldiers, is a four-line pattern that occurs during a defined trend. This pattern represents a resting period, but Unlike most resting periods, this one occurs all in one day. It ends up as an extended 3 white soldiers pattern. The 3 white soldiers indicate the trend is continuing. The 4th day opens in a manner that resembles the previous days. However, profit-taking sets in and continues until the close is below the open of the first white candle. The black candle body completely negates the rise of the past 3 days, but it has gotten the short-term pullback sentiment out of the way. The uptrend continues from this point. Okay, so my interpretation is the market is poised to take out the high in January of 2022. But in January 2022, as soon as that high was reached, the beginning of January, the market dropped and we were about to take it out. At least this is what the candlestick patterns are telling us. So that's my video for today. Trade safely, use lots of patience. Thanks so much for watching. Please consider subscribing. I'm Marv Eisen of Timeless Dollar Trading Academy, and I'll see you in my next video.